Bitcoin is falling pretty fast. It's your boy Crypto Millie. I'm back with another one. Guys, we are seeing a league-wide correction in the market. In my opinion, you got two options, right? And we're going to be talking about if retail is here, right? We're going to go over a few key stats about the macro. We're going to really take a look at what a quantitative tightening bull run is, because I think people need to know the differences between quantitative easing and quantitative tightening. Also, I ran across a cool little tweet here from Oil Blatt L2. He says crypto in its current state can only create more problems for the masses. It's essentially extracting wealth of the middle class and distributing it to VCs. I want to know everybody's opinion on this, because this is actually a legit aspect that a lot of people ignore in crypto. I want to add also that you're seeing pump.fun here. If you ever use pump.fun, it's literally making more revenue than Uniswap, right? And 75% of the people who interact with pump.fun lose money, all right? Especially if you don't know what you want to do. You can make money with pump.fun, but for the most part, I've seen a lot of people lose money. So at the end of the day, gambling is at its all-time high in crypto, and we want to talk about if this is just the same people in crypto or is retail truly here. So if you like these type of videos, make sure that you like, subscribe, hit that notification bell, and keep your favorite crypto and door-to-door entrepreneur inside the algorithms. Consider the Discord, Patreon, and community project. We are working. I know I've been like dropping less lately. It's because I've been doing a lot more research, guys, looking to put out there more quality over quantity here. But we are getting a league-wide correction, and many people have been asking me, well, Millie, is this the top? Is the bull run over? Is it time to start preparing our exit strategies? And the biggest advice I can give you guys, or recommendation, because this is not financial advice, okay? The biggest recommendation I can give you guys is simply having patience in the market, right? You can see here, most people expect nothing to happen until September, right? The market is in a pretty weird place where we're not seeing a lot of interest in crypto right now, and a lot of people are kind of like either bowing out or they're accepting that Q3 could be a little stagnant, right? Where you start to see crypto, Bitcoin, and these altcoins either go sideways or bleed out. All right, so with the CME group here predicting that we won't get that first Fed rate cut until September, what I wanted to explain to you guys is what to expect in a quantitative tightening bull run. And the reason I'm saying that, because this bull run is totally different from what we've seen in 2021, right? We've seen the money printer on, right? There was a lot of money injected into the economy due to COVID-19, and we call it the stimmy packages and all the relief fund money that they put out there. And many people were smart with that money and put it into cryptocurrency. So a lot of the experts will argue, well, hey, this was an inflated bull run, and maybe we don't get that blow off top to the trend line that we normally get here, because there's not much liquidity in the market. Guys, I want you guys to understand that in order for crypto to thrive, it needs liquidity, right? And there's been conversation across especially in the States, that a lot of people are broke. In fact, nearly half, 48.6% of Americans consider themselves broke. About 2/3 of Americans also report feeling that they are living paycheck to paycheck. We did polls, we asked people, and there was a lot of people that agreed with this statement. Let me know in the comments how you feel. Now, I've been on the side saying that, hey, I believe that a correction, is in the cards, but I also believe that we could get this blow off top here after the correction is done to the trend line, because technically throughout history of crypto, the Bitcoin cycle, we've always topped up out here at the trend line. We haven't gotten close to the trend line, and many people look at these cycles and feel like we got to get that phase 4, which is that parabolic stage. Bears, they don't see it coming because they don't feel like there's enough liquidity, and they don't feel like there's enough retail in crypto. You can actually see the interest just dumping, like looking like one of those one charts, right? Dumping, right? And I don't want to say one charts, right? Because there's a lot of good projects that go through this and actually do bounce back. But if you're new in crypto, you might get misinformation. But the gist of what I'm saying, guys, is that the retail interest is waning here. And this is always a great time to start preparing, right? Start preparing. If you truly believe that, we're going to have that parabolic stage, you don't buy in green candles, right? You buy when people are putting out negativity, when people are scared, when people are fearful, right? When people are saying it's over. You always want to do the opposite of what the masses are doing. When the masses are talking about Bitcoin, crypto on TV, and you're seeing normal people, normies that never talk about it, that's a sign that, hey, you might want to start taking something off the table. But when you see a correction like this, right, and we know that the trend has been bullish, we know that eventually we'll get quantitative easing towards the end of this year, right? Q4. A lot of people think that money printer will go on around election time, right? So we got to consider what the bull run catalysts are, right? Fed cuts, right? We get expectations where we're only going to get one federal rate cut opposed to three. So now we're looking at one opposed to three. So you might need to change your time frame on when you think that money printer will happen. ETH ETF, that's probably highly unlikely now that the SEC is attacking Ethereum, right? So it's kind of hard for me to think that that happens. But hey, maybe this is a psyop where they attack Ethereum, bring down the market, and then hit us with ETFs. You never know what's going to happen. Anybody that tells you they know exactly what's going to happen, they probably don't know, right? And then the biggest question is, when will retail return, right? How serious will traditional markets take the tokenization of traditional assets and just retail in general, right? Meme coins. We just seen a guy say that he feels like this has been a generational transfer of wealth from middle class to VCs, which is a point, right? When you think about all the people right now that's losing money, right? It says mass adoption for what? Show me a single app that can solve single retail person's daily problem. I personally do a lot of stuff behind the scenes in crypto, right? And I've personally noticed that you get overcharged for things that you probably wouldn't get overcharged in Web2 because people look at crypto as a place where there's just lots of liquidity, right? Normal things that should be happening, I don't want to speak too much on it, behind the scenes, are not happening because people are tight on liquidity. So you might go into a integration or a partnership or a connection with the idea that, hey, this is the final price, but because liquidity is lacking throughout the space, you find yourself being drained by these integrations, partnerships, and exchange listings, et cetera, et cetera. So me personally, because I work with a lot of things behind the scenes, I feel that pressure of the tighteningness of liquidity. So I would agree here, right? That a lot of these dApps, no one actually fucking uses, right? It just is what it is. So that's why you see a lot of money just simply going to something like pump.fund, because people are like, why do I need to buy something of utility where I can just buy a meme coin and make 100,000 overnight, right? That's the type of mindset we have in crypto. So you'll start to see VCs, whales, experienced traders take advantage of the get rich quick mindset, and then at the end of the day, retail gets wrecked, retail gets mad, and then retail goes spread out the word that crypto is a scam. So this is why right now is just a odd place, right, for cryptocurrency, and actually a great place if you're an opportunist. Now, I know you're like, what the hell, you just said this? But yeah, because I mean, blockchain itself, there's an argument in the debate here that it is the future. It will be used because it's transparent in trust, right? It's transparent in trust. But then you got to look at, is retail really, really going to give crypto another chance, right? And the shit that happened with SBF, it really did set the market back, right? It's different when, okay, normies get burnt, but when you got like Tom Brady, Steph Curry, you feel me? What's the Mr. Wonderman, right? Kevin guy, these guys getting burnt, right? These are the guys that you need speaking for crypto and not against. So when you don't have those catalysts, those influencers, those celebrities speaking anything positive on crypto, it's hard for it to spread and gain that adoption, right, that we want to see from retail. So the biggest thing again goes back to the number one statement in this video, which is having patience. Let's talk about quantitative tightening, right? Because a lot of people are looking at it like, well, Millie, when are my altcoins going to go crazy? Guys, in my opinion, this is a bullish chart, right? As far as the weekly, when you think about it, right? So you see that we are going through the reset here on the stock RSI. What I see is a cup, and I'm seeing the total altcoin market here put in the handle. I can say the same for BTC. I'm seeing a huge cup, right? A huge, a huge cup right here, and putting in the handle. Now, if the handle can hold the bull market bands, I personally think that this is bullish, right? I think that this is what we need, a flush out for us to head up to 80K, 100K. So from a trader's perspective, and I can go into a monthly, 6-month chart and kind of like make a bearish, a bearish claim as well, right? Because there are bearish things on the longer time frames. I can't cap to you. The longer time frames are a little bit more bearish than something like the weekly or daily. But I think a rally could happen because, in my opinion, this looks like a huge cup. The handle is looking to retest the bull market bands. And most likely, if we are believing that the trend is your friend to the end, we should get that push to the upside from the handle here, touching the bull market bands and pushing us to the upside. But guys, we got to understand we're in a quantitative tightening bull run. All right, I'm gonna close out the video with this. QT is the process of where central banks withdraw money from the economy by selling securities or letting them expire, which reduces the central bank's balance sheets. The impact that this has on prices, asset risk on asset prices, typically leads to higher interest rates, what we're seeing, as it aims to decrease the money supply. This can have a cooling effect on assets prices, and borrowing costs increase. The appetite for risk decreases, right? Durations and grains. Now, this is where we're at, in my opinion, with this quantitative tightening bull run. Bull runs during QT are less common and usually more muted. Any gains in asset prices might be more due to underlying economic strength. So anytime Jay Powell goes out there and says, hey, we're pausing, or hey, there might be a Fed cut, that's a catalyst that could push this quantitative tightening bull run up. But until they turn on the money printer, it's not based off liquidity conditions. And people need to understand that. These bull runs might be shorter and see smaller gains compared to QE-induced rallies. So this is where the bears say this bull run would have the most diminishing gains. Now, you have to be the judge if you feel like, because we are in a quantitative tightening bull run, this could be the most diminishing gains. And I'm going to give you some hopium by the end of this video. Like and subscribe if you're getting that true alpha, right? What to expect. So under QE, you would expect more pronounced and sustained bull runs, right? And what we've seen from 2020, 2021, overvaluations and inflationary pressures. We've seen it. Quantitative tightening bull run, expect shorter, less dramatic bull runs, focus more on sectors benefiting from economic growth rather than the broad market lifts due to liquidity, which we just talked about that. And you can see here, this is the immediate impact on financials markets if they turn the money printer on in Q4. Now, this is the hopium, right? The hopium is we get a quantitative easing bull run in the last leg of the bull run, meaning phase 4, phase 5, we get quantitative easing. This is the bet. If you're buying crypto right now, this is what you're betting on. It's nothing else. That we get QE, Q4, and we get a parabolic stage, right? So the introduction of QE after a period of quantitative tightening typically leads to immediate positive reaction in the financial markets. The expectation of increased liquidity and lower interest rates can quickly boost equity and other risk assets prices as investors anticipate easier borrowing conditions and higher potential rewards. Decreased in bond yields. As the central banks buys long-term securities, yields generally fall, which inversely affect bond prices, pushing them higher. This makes bonds less attractive relative to equities and other high-yielding investments. And the Fed already talked about how they're already starting their buybacks, right? They're already starting their buybacks. They're preparing. They're preparing for the money printer, right? So this is the consideration. This is what everybody wants to believe, right? The switch to QE could extend the bull run beyond its natural economic cycle, potentially leading to over-evaluations. Investors will need to be cautious about when the market dynamics shift from fundamentals-driven growth to liquidity-fueled speculation. Guys, I can't make this up. This next little portion is probably going to be the portion that washes a lot of people out, right? And I'm gonna close it out with Elliott trades. So this is precisely these moments when the market is grinding sideways and there hasn't been a fun move in months. People start to tune out, views go down, vibes change. I'm even feeling it. Said it's the right time now that you slam the gas pedal, lock in, and make decisions that will change your life. Guys, let me know what you think about quantitative tightening and quantitative easing bull run. If you got some value here, like and subscribe. It's your boy Crypto Millie, and let me know in the comments. Are you bearish, bullish? Do you think that this is the end, or is this one step closer to the parabolic stage? I'll see you in the next one.